Hello, everybody. I guess I don't have the complete time to write the book I propose in the subject. When I get the idea of a monthly webinar, I thought of talking about a lot of things. So I will try to move along all the webinar as fast as I can. But if in any case you find out that I'm moving too fast, it's okay if you ask questions in the middle, okay? We have a lot of time ahead, and it will be a pleasure to answer your questions, okay? So, I believe the idea here will be starting from the beginning. We are right now looking at an euro-dollar for our charts, okay? And as you may know, a chart is just a drawing where quotations, of, in our case, currencies are reflected, okay? The evolution of price is placed in the vertical way, and the horizontal way is the temporal dimension, okay? So, placing in every day or session the quotation, the price curve gets a form, and so we can analyze the evolution of any pair through time. And we can choose the time, okay? We can see daily, weekly, monthly, different ways of charts, okay? Different time frames. Usually, this quotation chart is viewed with another complementary chart that helps us to analyze this price curve we are looking right now, okay? And those charts are at the same scale than the first one we are looking right now, are usually placed in the base that give us different information about what's going on with the charts. Usually, those small windows in here are what we call indicators or oscillators, right? That are mathematical representations of the relationship between different variables, usually the quotation, that depending on the trend, the change, the market's way, or breakthrough different trend lines, these indicators or oscillators have show us the moment of buying or selling a determinate currency in this case, okay? We call oscillators the ones that only have variations from 0 to 100. We are going to see some examples. And we call indicators the one that move in an open way, okay? And not limited, but 0 and 100, okay? For what it takes, we usually prefer to work with candlestick bars, okay? We used to take a look at price reflected in these candle bars that represents a different session. In this case, we are looking at daily charts, okay? So I'm saying okay too much, right? I won't do it, okay? Anyway, the idea is that candlesticks have two extremes, okay? I will approach the chart so we can see it clearly. An open and a close. In this case, in this chart, red one are bearish, blue one are bullish. Okay, we have an open, the close, and the extremes that represent the maximum or minimum of the session. Depending on our needs, on our trading options, and the ways we see the market or the time we have available to see the market, we can analyze charts of different time frames, from 5 minutes to monthly. In this case, at least this is what my charts allow in here, okay? We usually say that for a long-term analysis, we can study daily, weekly, or monthly charts that give us a deeper perspective through time. But if you want to analyze short term or you are an intraday trader, then we should move to 30 minutes to 4 hours charts. Okay? So, going back to what we use as technical oscillators and indicators. As I told you, it's a mathematical representations between different variables. Okay? So, the main advantage of these indicators or oscillators is that they are very easy to use and at the same time give us a reliable point to base our selling or buying decisions, as their signals are clear and concrete. That's why we believe any valorization, especially at short or medium term, must be complemented with these technical tools. For for what it's worth it, I usually prefer trading technically. Okay, I'm not a fan of fundamental trading, and I will tell you why later in this hour and a half we have in this first half of the webinar. But anyway, I respect fundamental ideas and I follow very much fundamental new releases, but I complement it with technical analysis. I believe that technical is always respect no matter what fundamentals we have released. Okay, so now is everything's fine. Okay, as I told you, there are many kinds of technical indicators and oscillators, and as you all may know, every day new one is created that disappear as quickly as it appears. There is no universal indicator, no perfect one, valid for any kind of currency and any kind of market situation. And that's part of what I believe is most important before even starting to trading. Understanding that oscillators and indicators are just tools. My master always says that if you only have a hammer, you will be only hitting everything you have around yourself. You need different tools to act in different circumstances. And that's why we use different kinds of indicators in different kinds of market situations. Okay? These technical indicators or oscillators can be applied to all kinds of markets, and after years of tests and observations, we can say that the ones that with better performance and most common usually are the RSI, the MACD, momentum, Bollinger Band, stochastic oscillator, and of course the moving average. They all give us enough information and valid trading techniques to move across the market with a profitable performance. So let's start reviewing a little thing about each indicator before moving on. We are going to start reviewing momentum indicator. I will add it to the charts. We will use a typical 14 periods momentum indicator, okay? And the only difference between what is classic in market and my trading style is that I usually apply indicators to open and not to close. Because when you apply all indicators to open, they probably give you less number of signals, but they will be highly profitable in comparison to the ones applying to the close of the candle. Right? Right now, we are looking at the momentum indicator, and this is an oscillator that measures the amount of currency price change over a given time frame. Okay? It's significant because we can use it to measure the speed in price change and take advantage of that. Generally, a healthy price trend tends to exhibit a strong momentum. Like in cases, I don't know, maybe we can see in a different chart. Okay, here we have what we call a healthy trend. Okay, sorry, it moves up. Okay, when you see that momentum is moving vertically, like in this case, remember we are just looking at daily chart, okay? We say the trend is healthy, okay? And as long as the indicator remains straight up, we know the price will do the same. See how when candles become to, these two candles become to be close to the negative side, momentum indicator starts to turn over, yet not confirming it completely, the turn out. But see that how the trend is losing the health it has previously when momentum was so vertical. Okay, this indicator usually can be used as a leading indicator, but because we assume that the market tops are typically identified by a rapid price increase when everyone expects price to go higher, and that market bottoms typically end with rapid price declines when everyone wants to get out. As the market peaks, the momentum indicator will climb sharply and then fall off, diverging, okay, from the continued upward or sideways movement of this price. It also let us study the speed of the movement related to the, in this case, 14 number of previous sessions, and in many cases, although price continues its trend, momentum gives us things of exhaustion, that indicator is tired of that trend, and starts to turn in the opposite direction in advance of price movements. And that's something we can use to trade and get advance. See, right now in daily charts, okay, let's try to put it closer. Momentum is turning down and price is doing so. In the peak we have last Monday, Tuesday it was, of 160.40. Okay, indicator closed today bearish, sorry, and the candle, the next day candle opening, sorry, turned the indicator down, pre-announcing a follow through the drop, sorry, in the currency. Well, okay, we have some questions here. Okay, you're asking a question about what's going on with euro. I can do it, but I don't consider A30 broken. The point 58.32, 58.30. You mean? I don't consider it still broken. I need a 4-hour candle to confirm it, at least under that price. It should continue falling, but I don't believe it. Easy, you said it is a leader or laggard indicator. I believe it's a leader indicator because, sorry. I believe it's a leader indicator because you can find tops in the indicator and turns down. See how I was telling you this candle opening to show us turns the momentum down and pre-announce a drop in the currency, sorry, from here around 59.09. I consider it a leading indicator when you apply it to open, okay? Yes, Boyke, you're right. We should keep questions to the indicator's behavior and not if currencies are going to fall or rise in the next minutes. Forex champion, yes, of course. For smaller charts or time frames, I still use the same momentum setting. For any time frame, I use the same momentum setting. But I always said smaller time frames mean less reliability in the signal, and besides, you can accomplish a bit less number of pips, of course. The targets will depend on the charts you are trading on, okay? I just place, this is a daily chart, okay? We can take a look at 30-minute charts and try to find the signal, but it's okay. Anyway, I was forgetting about something quite interesting, quite important about the indicator, and that's it, that we consider a signal a cross of the 100 line, okay? See the 100 line in the middle? Okay, a vertical cross under that line give us a bullish or bearish signal. In this case, we have a bearish signal in this cut, and we have no clear cuts to the upside right here, right now. I believe this indicator, for me, works better with GBP. Anyway, if momentum is quite clear, we should move to another indicator so we can talk about everything in I plan to, okay? But that's a good question. Let's see if we find a clearer divergence. But the idea of divergences is that while price, it's not maybe the clearest example, but see from here, we have the price continuing going up, okay, new maximums in candles, and indicator going down, meaning it's making less, it's, sorry, the peaks are shorter than or smaller than the one from the beginning, okay? It's not the best example here, but could be considered divergence. And that means the currency is quite tired of moving up and should turn down quickly. That's a divergence, a difference of directions between the price charts and indicators. It can be measured in almost any indicator divergence. Okay. So let's move to another indicator. Okay. I don't know why I choose euro, because it's just the currency these days, but we can see it in any other chart. I will remove the momentum and let only the RSI. Okay, this is my second favorite indicator. Okay, this indicator measures continuously the strength of offer and demand, and it is expressed as a percentage, meaning it's an oscillator that moves between a certain range, of 0 and 100, okay? Being the middle of the indicator, the 50 line, and what we consider as a neutral zone, okay, where we say offer and demand is balanced. See how right now the price is just right there. Anyway, this indicator told us that not if market is in trend or not, but if a currency is oversold or overbought. Oversold, sorry for that. Meaning, when the price is, when the indicator is, the line of an indicator, is above the 70 line, okay, we consider the currency overbought, like in this case, and when price is under the 30 line, like here, we consider the price, the currency is oversold, okay? So, what's the use for this? Well, this indicator tells us that a probable correction or reversal in trend is about to happen, right? It gave us signals, and it's useful for when it moves away from the central line. Because as long as it stays away from this 50 line in the middle, it's telling us that offer and demand are out of balance, okay? And for example, when the indicator reaches the line above 70, it's telling us that the demand is overbought, and we should wait for a turn in the currency. The way to trade this indicator is when the price, the indicator, cuts down the line, okay, and gets into the 70 zone again. A better way to use it is drawing resistances and supports in the indicator. Let's see if we can see it clearer in smaller charts. Here we are. I will remove the blue line. See how we have here a maximum zone of indicator, okay? And we have a turn down. See, in this second case, I hope it's not too small, that price top, okay, a bit up than this previous one, but the indicator here was at 81, and it here again was around 81, 82, okay? So we know that if the indicator in a 1 hour chart stops around 81, there's a probable reversal underway, okay? And see how in the first case, the indicator reversed 60 pips, and in the second one reversed a bit more, but it's not the number of pips that reverse. The important thing here is that the resistance we draw in the indicator is giving us an entry point, okay? So we say that these indicators show us higher buying or selling probabilities. It's important that take notice of the trend change of an indicator, that you can clearly see peaks up or down that can show us the end of a trend, and so these peaks are marking probable maximums or minimums in price. That's what I mean. The problem with this trend change is that many times they don't have a continuity and quickly change direction, okay? The best way to filter this is to analyze the indicator chart, drawing this kind of lines I draw right now. So if RSI breaks a support or a resistance, like in this case, we will have a signal too, but it's better to wait for the peak to turn. Okay? Head and shoulder. Swana, what do you mean about head and shoulder? I turn the camera out. Okay, going back to the camera, I found out that we can use this indicator in 30-minute charts in euro, and it's very reliable when it takes peaks above 80 in this case, because we shouldn't remember that the first thing to analyze in market is the dominant trend. Of course, this pair is quite bullish, and I use this indicator in 30-minute charts to seek for reversals, okay, for probable corrections. We can filter it with, I don't know, Fibonacci retracements that we're going to talk later, or a moving average cross. But the idea here is that once indicator stops out about 70 in a bullish trend, okay, we have a correction and a probable correction underway. And if you combine 30 minutes with 50-minute charts, and in both charts the indicator is indicating oversold or over both signals, it is good for use with euro dollar. So, okay, I turned the chart down for a second so I can ask you if you have any questions about these indicators in particular. Swana, we are talking about this pair, but this is not related to the indicator. We will talk about figures a bit later if we have the time, okay? And then we will talk about the head and shoulders you're seeing in the euro dollar, right? But I want to know if the RSI is clear, or do you have any questions about this indicator? Okay, seems there's no questions. Yeah, good. We are going to move to another one, okay? I know I'm moving a bit fast and my tongue is kind of messy, but because I want to talk about a lot of things, and since I won't have the complete time. Okay, back to the charts. We will remove the indicator, okay? And move to another one. The next indicator I like to show you is the MACD, okay? I hope the bars are clear. Okay. This indicator introduced by Gerard Apple is used by measuring exactly what we are talking a few minutes about convergences and divergences between moving average. And this is a very traditional, simple, and reliable indicator, and uses two moving average inside its formula, one called MACD and the other called signal, okay? That fluctuates around the zero line. I hope you can see it. It's not too clear. We say that have a buying signal when the MACD line cuts the signal line, downside up, okay? When these gray bars, okay, this red line, can you see it? Cuts upside down the other side. And we say that we have a selling signal when the line cuts the other way. From a we have a descendant cut, like in this case here, okay? I don't know if oh, there we are. Let me remove this. So, okay, when the gray one cuts the red one, okay, here, around this zone, we have a cut. Okay. Another thing to take care of is the divergences between MACD and the chart, and the break of what we consider trend lines. MACD has the disadvantage of being a price follower and not an advanced indicator, but in the case of analyzing divergences, that cases, yes, is what we can say is an advanced indicator, like any when we analyze divergences, then we say that it's a advanced indicator. But I believe the MACD, like almost any indicators, give the selling or buying signals not in the price maximums or minimums, but a bit later, okay? When the quotations rise or fall, and drag the indicator with it. As this indicator identifies the beginning or the end of a certain trend, it's better not to use it when market is moving sideways, ignoring any signal and waiting for another signal like, I don't know, if the price is in overbought or oversold zones through charts and divergences analysis. Like any other indicator we will talk about, we could trace supports and resistance in the indicators, okay, to try to find out where are the overbought or oversold zones in this indicator. Can you see it? See how it reaches maximum and minimum here and turns a bit. But the idea of overbought or oversold should not be counting until MACD is far enough of the zero central line. Okay, I can say the pair is overbought or oversold when it's around here. I don't know. See, this is when market moves sideways and the indicator is not quite reliable. See, to make the buying or selling signals even better, we can analyze the indicator charts as well, setting, like I did, supports and resistance that can help us confirm the signal, okay? We say that there is, this indicator also give us what we say divergences, okay? And here we have a clear one in these 30-minute charts. See how the price is making new maximums while the indicator moving from the same, starting from the same spot, starts to go in the other direction. See that we start just in the same point. Okay, we have maximums in the indicator, minimums in the indicator, in the oscillator, sorry, and maximums in charts. There we have a clear divergences of prices. This means that after this peak and the probable rebound we see here and this bearish candle, the chances are that the price will continue falling. Okay, a bearish divergence will be exactly the opposite of this. Okay, minimums in prices and maximums indicator. Anyway, regarding particular to MACD, I believe divergences are not quite reliable, so we must add something else to our analysis, in this case, to trade divergences. Okay, maybe we can use supports and resistance or a moving average in this case to add to the charts. But anyway, I believe we should add a filter to this MACD divergences. Remember, we are just looking at 30-minute charts, and that's not the most reliable one, but this is an example of a divergence. Anyway, these indicators we have been talking about are usually, as I told you, trend followers, trend advancers, but they measure trend. So what do we do when market is moving sideways? What do we do when we have no clear trends in markets and we need another kind of signal? As I told you at the beginning, this is the MACD is the worst indicator you can use when market is moving sideways. Well, for market moving sideways, I prefer to use stochastic oscillator. The only difference between classic stochastic oscillator and the one I use is that I use 833 indicator and not a 533, okay? Okay, so let's try to find a period of time when market was moving sideways. Like here, see, the price was trapped in this band. Even better before the famous days of the rates in Europe and the payroll in the States. Before that, market was moving kind of sideways. Okay, so sorry. Any questions about the bed? Okay, sorry. I was moving too fast. Harley, you have a question about MACD, sorry. Yes, the red line is the 12 period CMA, is the faster of the two. Adam, that's what I'm going to tell you about. How do I filter sideways markets and trending markets? Well, first of all, I was Yes, I will drop my emails. We have plenty of time. Are you? But okay, back to Adam. How do you filter sideways markets and trending markets? I take a look at the charts in a bigger time frame than the one I would choose to trade. If you choose to trade short term, meaning 30 or 1 hour charts, you should look at 4 hours charts if market is in trend. If you trade 4 hours daily charts, then you must filter if you have a trend in, I don't know, weekly or monthly charts. That's the idea, okay? Uh, I was trying to find the charts previous to the release of the Europe rates and non-farm payrolls in the States at 4 4 of July was that market was really moving sideways in a short range. I will try to put it and show you how the stochastic oscillator works. Meaning, yes, meaning let's see if we have an example here. Okay, this is a daily chart, see? But see how the price spends a lot of time moving between, oh, I go too far away, okay? Between these two bands, that's what we call a sideways market. Of course, this is too far away. I didn't want to move that far. Let's say here, okay? Looking at this steady chart, we can say the pair is moving sideways, okay, without defining a clear trend. Even putting my top here around 160. I don't know. This has been happening from, see, 21 April. We have 3 months with market between a daily range of 700 pips. We have no a complete trend right here, although the pair remains bullish in the longer term. Okay, in daily charts, we can consider this is a range, a market moving sideways. It's trapped in a short, really short range. Sorry, I couldn't find the word. See, if we move to smaller charts, we could find smaller ranges. I don't know, maybe in 1 hour, you will find out that markets move in ranges and usually between two supports and resistance. Okay, depends on that values. Anyway, you have a lot of questions, and I will answer them before moving on. So Adam, I already answered that. I hope it's okay. Centric, I will place my mail later. Meaning that, I don't know, market never moves in one row, okay? It's not, say, it's bullish and will move up and up and up and never come back. That doesn't happen ever. We have corrections, we have rebounds, we have a lot of movements. If you have different signals, contrarian signals, smaller charts, you can take them if you find them reliable, if you ever test them. But those signals should give you a smaller number of pips. That's the word I was trying to find. And Yofi, you say no, exactly. MACD doesn't work for ranging markets. That's why I was trying to present stochastic oscillator. That's the one that really works for ranging markets. Exactly, Yofi. It's the worst tool for ranging markets. Exactly. Okay, Chuck, about trading plan topic, we are going to talk it right now. And where is cable going? Okay, I don't know where it's going right now. I'm not watching it, but it's not part of this webinar. Srini, that's a good question. What is the minimum profit to consider an exit? It will depend on the charts you are trading. If you are trading in 50-minute charts, you can wish for a profit of 100 pips. That's something that should be really clear. Let's see. For example, this pair we are looking at, the euro dollar. How much does the pair move today? 100 pips, 120, not more than that, okay? And if the pair moves 120 pips a day, okay? And you are trading 5-minute charts. How long do you believe the signal will last? We said signals last more or less 4 more candles. So if you're trading 5-minute charts, your signal should last 20 minutes, okay? If you're trading 1-hour charts, your signal will last, I don't know, 4 hours, okay? So depending on the time frame you trade, that's the way you consider the minimum profit to consider. I believe that if you're trading in 30-minute charts, I don't know, in this pair, your profit should be around 20 pips, okay? But not more. Not more, because in 30 minutes, the pair can move 120. At least, of course, if you have a strong signal and the price continues moving, okay, but the minimum profit will be 15, 20 pips, no more in 30 minutes charts. If you move to 4-hour charts, in this pair, I believe 50 pips, 40, 50 will be the minimum profit the signal should give, okay? Forex champion, how to find true support resistance using these kinds of indicator. Well, that's part of the trading plan we are going to discuss. And if the time gave us. So let's continue with a little bit with the basic oscillators, okay? And then we will try to design what we consider a trading plan if you wish to, okay? So I don't remember what even I said about stochastic oscillator, but let me turn the camera back on. So we need to use for sideways markets, okay? This indicator with the modification are made, or the classic 533 is what we call the fast stochastic, okay? And it's the indicator to use when you have a sideways market, okay? When price is not breaking and it's inside range. Let's see if we find a clear example of that. I believe in Japanese yen we could see it clearly. Okay, let me remove the indicators. Another and a stochastic oscillator, okay? 833, okay. So here we have an example of a pair moving in a side, what we consider a sideways market, okay? The pair is moving between a range for a long time, meaning from June 11, I don't know, till June 16, I've been 15 days moving in a tight range of 150 pips, not more. See the difference? So this indicator produces many crosses and it's not fine. Okay, seems we have some questions with the recording of the video. Is that okay? It's now okay? Sorry for that. No for you, sorry, but because we are recording the webinar and the administrator is telling me we have some problems with the dimensions of charts. Is the charts okay? For the administrator, sorry, not for you. Excuse me. Okay, you say it's great. I hope you. Okay. The idea with this indicator, let's move quickly so we continue. On. It's like all indicators. The difference between two moving averages, okay? And we have to watch two levels, of at least the classic ones I prefer. Some people change the levels, and that's okay if you test the divergences, the indicators, sorry. But the idea is that to see the both lines, the stochastic line and the key line, crossing each other up or and under, above, 80 or under 20, okay? You can see that when prices reaches the top, in this case of this channel we are looking, starting here, okay, we have a previous uptrend, okay? And here we have the beginning of this lateralization, okay? We have a cut here, the green line, the red line, and they cut the 80 line. That's a signal of selling here in this candle, in this 4-hour chart. And our target should be the turn of the indicator, okay? When the indicator line turns up, there's where we should close the position, okay? Because we don't know at this time of the range, if the range will continue or not, okay? So when the indicator turns up, that's where we close our position, meaning, I don't know, 100 pips, maybe 80, because we surely do it later as soon as the indicator begins to move down. But the idea here is that when market is in range, the cut of the two lines and then the cut of the 80 or 20 line is the one that gives us the signal to get into the market. And you can see that when it tops here, it gives us an 80 pips rally, and here, well, the indicator grows up and turns, but see how the base of the range is broken. So I don't consider this a good signal. See that the price didn't cut the line, okay, and the price breaking down our range. That's the time when we should ignore this indicator and change to other. I usually put in my charts a stochastic as a complement, okay? I don't watch it every day. I prefer trading with momentum or RSI or CCI that are better indicators. But the idea here is that stochastic should be there in case we have a lateralization in market. I could talk about moving average, but I guess we have enough of indicators for now. So for the health of the time we have, let's continue with a trading plan, okay? You have no questions? Okay, this sounds fine. Okay. Okay, give me a second, I will take some water, okay? So, let's start with what I call a trading plan, okay? How many of you start your day knowing exactly what are you going to do when you sit in front of your computers? My master always says that if you don't have a plan, you are in someone else's plan. And that's, I believe that the first thing you need to learn to understand the market behavior. We can read or thank you, Boyki. And I believe that if we don't have a trading plan, no matter how many indicators we study, no matter how good we are understanding all indicators, we couldn't get a real idea of we couldn't success in forex markets. That's the idea. If we don't have a plan, okay? And some minutes ago, somebody asked about supports and resistance and how do we get supports and resistance. Well, that's one part of the trading plan, okay? A trading plan involves a lot of things, but we will review them slowly, okay? First of all, we have to define where are we going to trade. Not the physical place, but how many hours we will dedicate to trading each day, okay? And which charts are we going to trade? Because some people, I know people that have, I don't know, maybe 1 hour a day to take a look at charts and works in another things, wants to trade. So I was reading the charts and I was saying, how many hours a day will you dedicate to forex trading? And that's the first question you need to ask yourself before setting a plan. If you're going to be a full-time trader, that's one thing. If you're going to be 2 hours a day trader, that's the other thing. Okay, depending on each different situation, you have to choose the charts to trade. I believe that that's the first thing you need to know. Choose a chart. Okay, So let's say we are a daily chart, okay? And yes, I turn the chart off. I will put it on right now. Okay. Here we have the 4 hours GBP chart, just for an example, okay? So let's say you are an intraday trader, you have 6 hours a day to trade, and you can do it in the European or American sessions that are the one with most volume and where currencies move a lot, and you can trade 6 hours a day, okay? So what's the first things you need to do when you have already chosen your time frame of operations? Well, choose a system that you can rely on, okay? In this case, I'm just an example. I'm have the classic and my beloved elder system that I have talked a lot of times here to you, that consists in the momentum indicator and just a simple 20 periods moving average, okay? Quite reliable for GBP in 4 hours charts. Once you have chosen the time you're going to spend in market and the indicator you want to use, you need to backtest it, meaning you need to trust in your system, because if you don't have backtested your system, if you don't know your system, you will discard it at the third bad trade it gave us, and that's not the idea, okay? The idea is to have a system that you can rely on, and I believe in this system. Anyway, the first thing to do when you sit in front of your computer at the morning is setting the supports and resistance zones to start planning your daily trade, okay? For example, early this morning, I found out that the GBP has a descendant trend line around here in 4 hour charts. Let's see if we could put it a bit. Okay, here we are. I can find the second dot. Oh, okay, here it is. Okay, we have here in the 4 hour charts a descendant trend line. I am an intraday trader, meaning I trade 6 hours a day. I take a look at 4 hours charts and try to find out where the trend is. Once I define or find out where trend is, okay, meaning the pair is kind of bullish here, I draw my trend lines and try to find my supports and resistance zones. This trend line, for me, should act as a resistance. Of course, you can see in smaller charts that the price didn't, in fact, respect it very clearly. Today it opens up and comes down. Anyway, the idea is to find out our supports and resistance through this line or through what I call fixed supports and resistance zones, okay? Meaning finding places where prices had rebounded a lot of times and came back. Let's see, around here in 9960 we have yesterday minimum, I believe. Yet we have a lot of maximums, and if we move to the back, okay, we will find out that the price rebounded there many times. Let's see if we can put the chart smaller. Here we have, okay, this is what I call a congestion zone, where the price is rebounded a lot of times, okay? So once I choose the time frame, once I draw my lines, I try to find the supports and resistance, not only one, but 2 or 3 around what I'm here. I will delete a bit so it's not that messy, the charts, okay? The idea is to find the zones where price will probably rebound. I know, for example, that price has a tough zone because I have been looking at for around 40, okay, and around 90. If you see it around 80, 90, we have another congestion zone. If you check back your charts, you will find out that price rebound there a lot of times, okay? So having the supports and resistance zones is important because we know that once the price confirms above or under one of these supports and resistance zones, we have an entry point, a probable entry point following indicators, okay? Once I indicated supports and resistance, our plan should turn and we should move to smaller charts to find signals, if you wish to, or breaks of the supports and resistance zones, okay? Are you following me, or I'm doing too much noise? Okay, you are following me, I believe. Okay, so choosing the time frame we are going to trade, setting our supports and resistance, and having the right indicators. So let's say right now I see that GBP is around 2.001 of all, right? I have another support around here in 199.80. More clear in 4-hour charts that the price has a congestion zone around there. Okay, so our trading plan should include the prices we are going to go into the market, to the upside or to the downside, following a signal. Okay, but we should, what I'm trying to say is, we should not say, oh, the pair is bullish, so the only trades I will take will be bullish. No, I have to set an entry point for this pair, one bullish and one bearish. I have to say, if the pair breaks under the moving average or under the 99.80 zone, it will probably continue to the 99.60. Okay, we have to manage probabilities. A break of one support or resistance will give me a signal that the pair will probably continue to the next one. Okay, and that's the idea of a trading plan, to consider both sides of the coin. That's what I was trying to say. Sorry. Maybe market this day or today, particularly, I don't know, GBP is around 2.00, moving and coming back like it has a magnet here at the 2 zone without a clear definition today. Okay, and we should move to smaller charts. But the idea of a trading plan is to, as I told you, consider the 2 probable directions the pair should move, and act in consequences, and not be stuck to the idea that the pair will be this bullish and I will go bullish, or the pair is short and I will short the pair. We don't have to trade just one direction. We have to consider and understand both possibilities even before starting trading. Okay, and not just only for GBP. I don't know. I will try to choose another. No, sorry, that's not the idea. We should do this for all the pairs we have. Okay, find the place where the probabilities change the trend. Okay, the breakthrough, the points we should use to get into up or going down. Okay, also once we define the probable entry points, okay, we have to define also in our trading plan how many pips are we going to risk in a trade, meaning where we are going to place our stop loss, okay, and where are we going to place our limits too, because I have the 4-hour charts, set the supports and resistance for today, and move to the 30-minute charts to I don't know, trade the intraday. Okay, sorry, my cell phone is ringing. I hope you can not hear it. I put it away. I will close the door. Okay, we don't have more notes now. I was saying, I'm back. Sorry for the interruption. Phones are ringing and I put them away. I hate when phones rings when I'm whatever. Anyway, I was saying, once you choose your time frame, your trading time frame, you follow signals following the trend in 4-hour charts. I changed to the Japanese yen because GBP is not in trend right now, and we have a clear uptrend in Japanese yen. Okay, so we know 150.50 has been a strong support zone these days. Okay, but it's not the only one. We have another one in here around the 20 zone. Okay, so a break of this zone and a confirmation of this zone in 30-minute charts, with including a pullback in this case. See how interesting it is. It's giving us a bullish signal. Okay, once the pair confirms above supports and resistance, we have an entry point and a probable confirmation of our trade. And going back to what I was saying before I get interrupted by the phone, the idea is to include in our trading plan supports and resistance. As I prefer to trade in 30-minute charts, okay, I will place my support or resistance, my stop loss, I don't know, in 30-minute charts, not more than 10 or 50 pips under the support or resistance I trace in 4-hour charts. See what I mean? In this case, if I choose to go bullish once the price break above 150.20, my stop loss should be, I don't know, 10, 15 pips under that point. I know that Japanese chance, if reaches 105.05, okay, will probably run to 104.81, but that's just because of empiric observation, as my teacher usually says. The pair usually moves between if any value, 105, 104, 103, between 05 and 85, the pair moves straight. See what I mean? So I know that if the pairs, if I get up into market in 20, I should place my stop 2 pips under 10, because if the pair moves there, then I have a mistrade. Oh, okay. Sorry, I'm kind of messy today. Okay. Forex, you ask, is a 20 EMA. It's a simple moving average. Yes. Stan, yes, that's the idea. In the higher time frame, we look for supports and resistance, and then go lower time frames to look for entry and exit trades. Yes, Forex champion, I believe that trend is our friend, and we should always trade trend. But when you have, I don't know, a major, like this week, the euro or sometimes GBP that moves straight following trend, I don't know, 200, 300 pips in a day, that happens. Don't you think it worth trading a rebound on it? I also usually mark streams, in daily streams in my charts, and I really like to trade in rebounds in streams. I don't know, yesterday after euro fall from 59.50 to 158.00, we have a 150 pips fall, and it was obvious it's going to give a rebound and don't break the 58.00 zone quickly, because it has no strength. It's reached the price in a certain hour around 3 p.m. East time or 2 p.m. East time, when Europe is closed and we are at the ends of the American session. Okay, Harley, Harley, you are the only one with no audio, okay? And Mar, yes, how do I choose my stop loss levels? It will all depend on the time frames we are trading, okay? But remember that to choose your stop levels, I place them, depending the pair, I believe not more than 15 pips under or above a resistance or a support, okay? That's the idea. If price breaks a resistance to the upside, okay, and confirms above it, okay? Yes, I put the charts on. Let's see if I can show you what I was saying about yesterday, okay? We have a daily chart, okay, in euro dollar. We have quite a zone around 58. See, in 4 hours charts, how many times price rebound there? Can you see it? Right here, and this time it has been sorry, it rounds 1, 2, 3, 4 times before it breaks and confirms with a candle opening above the resistance in this case, and become 58 become a support. Okay, seems we have problems with charts with the recording. Is chart K right now for the recording? Seems so. Okay. Yeah. Okay. So, talking about what happened yesterday. You say trend is your friend. One, I don't remember who said it, but anyway, we say trend is bullish in euro, right? Okay, but once the price rebounds, moves to a strong support, like in this case is 158.00, and see today it approached it very close. Today at 15 pips. That was a great entry. Today's minimum, because it won't be easy to euro dollar to pass this support in this case. Okay, it's moving up again. I don't know. Yesterday you was seeing in this 4-hour charts. Okay, you saw a fall and the price rebounding there. This next candle opening should give you an entry bullish point, and your stop loss will be just, I don't know, here 20 pips, and in your 4-hour charts at least 20 pips under the support, the fixed support, because we know that if price managed to break this 58, we could see a deeper fall of the price. In fact, I believe that the next interesting support zone will be this one, around 57.70. Anyway, I was not looking at the pair, and not the idea to analyze it right now, but the idea of the plan, going back to what we were telling before, is to find entry points not only with signals of the indicators, but with resistance and support levels. Right now we have another quite interesting zone of the pair around here, I believe 58, 80, 90. We can state a fixed number. It's just a zone, okay? We have some pips ups, down of resistance or support level, but the idea is that once the price breaks up 59, 90, we are bullish again in the pair, okay? And I should go up, should go bullish and place my stop 20 pips under this value, not more, okay? Because I'm trading in a 4-hour charts. See what I mean? If we move to smaller charts, then our stop loss will be shorter. But the idea is to place a stop under a support or a resistance. It's a good idea. Also, if we are trading with indicators like let's see, let's remove let's add a 20 periods simple moving average, not magenta, and a momentum oscillator. Okay, here we are. Okay, something. Okay, here we are. If we have a signal in the indicator, and see how we have one here, one momentum cross the 100 line and a candle open under, we have another clear signal. Okay, anyway, let's see. No, we have a cut here of the candle to the downside and the indicator cutting to the upside. That's not a clear signal. But what I was trying to tell, let's see if we find a clear example. Here. We have a good bearish signal here, okay? The indicator cuts the middle line in a vertical way, candle opening under, okay? And price moving down, okay? So once we lost any of the two conditions that get us into the trade, in this case we have a positive 150, 140 pips trade. But the idea is that when we lost one of the conditions that gets us into the market, in this case we have two conditions, the momentum cutting and the price opening under the moving average, okay? So if we lost one of those two conditions, if the indicator cuts the 100 lines to the other side, or we have a candle opening to the other side, that doesn't even need a stop loss. That means we should close our trade quickly and finish it there, because we lost the conditions that get us into the market, and that's valid for all kinds of indicators. If we have a signal and we lost that signal because of a reversal, then we should close our trade, no matter if we are losing 1 pip or 100. That's not the idea. The idea is that once the condition is lost, the signal is fake, and we should close the trade. Okay. So back. Questions? Yes, I can repeat again. I will just place my mails in case you want to take notice of them. I'm not ending this first part of the webinar, just placing my mails in case you need them. That's my messenger. Yes, Forex champion. Well, I was trying to say that, I don't know, for example, okay, if we use this system to trade, okay, let's go to a 15-minute chart so we maybe can see it clear, okay? If we have a signal these last days, okay, here we are. Here we have with Elder in 15-minute charts, a bearish signal, okay? The indicator cuts the 100 line and a candle opening under the line, okay? In this case, we have a 27.25 pips trade in 15-minute charts, euro dollar Elder, okay? In this case, it's a good trade for what it takes, but the idea is that if the indicator catch up to the other side quickly, or we have a candle opening above the moving average, the trade will be a fake, and we should close our trade quickly without letting the currency stop us out, okay? That's the idea of what I was trying to say. See, but because if you lost one of the conditions that get you into the market, that means the signal was fake, and you should close your trade, okay? See what I mean? I'm just choosing one system here to show you the signal. I don't know, let's see, here we have a bullish signal, okay? Not quite great because it's a cut coming from right here in 15-minute charts, not the great. I believe we should not use this system in 15-minute charts. Not only 30 is the smallest one we use to trade Elder. I don't know, maybe here we have Boyki. I remember you made a question about Elder. I will answer it right now. I get lost talking about it. I don't know, maybe here we have a cut. We have a candle opening under that's what here is a good example of what I'm trying to say. A candle opening under the moving average, okay? We have 15 pips, but quickly enough, we saw the indicator going up, back, and a candle opening above the moving average, and we are, I don't know how much, 11 pips negative, okay? We should close our trade there. It's the indicator changing, and the candle opening above the moving average is denying what the first signal, okay? So that's a fake signal here. That's what I was trying to say. I'm trying to go back and see. Boyki, you asked me if Alexander Elder is focused on technical trader. I believe so, because I have seen his books, and I believe that. And Harley, no, that's part of the plan. That's something I was trying to tell you. If my plan says that I get into the market with this kind of signals, my plan says that if those signals are reversed, I should go out, okay? It's part of the plan, trying to understand that. See what I mean? If you lose the signal, your indicator is already telling you that the trade is a fake. Of course, if you don't have time to be in front of the market all day long, well, that's a different question. But the idea is that, yes, exactly. You have a plan for market change, and you know market conditions change all the time here, okay? I don't know. You see today, for example, and that's something I wish I could talk more about, but we don't have a lot of time yet. I was with the idea of talking about a bit about how fundamentals and other things like gold, of oil, and even the Dow Jones or stocks interfere with forex market. Yes, Forex, I use pivot points in Japanese yen. You can write me to my private mails. My mails I post there, and we can talk about it, or put me in your messenger. But Moving on, I don't know if what we talk about till now is clear. We have, I don't know, 10 more minutes to talk. So if you have any questions, is now the time. Or we could talk about using fundamentals and other things, and how commodities and other things interfere in forex markets. Okay, no questions? Okay, so the, yes, I know I'm the one giving the class. So, but I'm asking you if you have any questions, and we could move on, or we could move on to talk a bit about fundamentals and other market things. Good question, right? Good questions. Good questions, Rama. I will tell you. Fundamental analysis maybe could be useful for long-term charts. Yet anyway, I always believe fundamentals are just noise in the market. See today the American fundamentals, how good they were, how great they were for the dollar, and how market sentiment anyway continues negative against the American currency. And yes, I believe only rates today can be today, meaning today for this last year. I believe that it's the only thing that could change trend. Okay, a rate hikes, a rate cut. That's the only fundamental today that can interfere with trend. And I don't know. For example, we have been seeing fallings and drops in all the housing sector in America for I don't know what the last 8 months, maybe a bit more. See the numbers of today housing reports. They were great, great. And despite that, dollars make a peak and continue falling because market sentiment is stronger against the currency. Okay, you can use fundamental to take spikes, but I don't guess. I believe not more than that. And Boyki, leading indicators, meaning the most important or the ones that give us advanced information. That's not clear for me right now. But if you mean the most important ones, the ones more used in market, and the most reliable one, I believe, momentum and stochastic, and if also the ones that give us advanced information of tradings. Forex champion, you talk about position in trading. No, no platform includes Argentinian currencies. we are the world doesn't remember us. Doesn't take notice we exist. Forex champion, about position in trading. It's the same. It's kind of the same we have been talking right now, but the difference is that you take a look at longer term charts, okay, and of course you have longer supports and limit zones, okay. Right now, I believe, for example, if you are talking about position in trading on the pair like euro, I don't know, you can go bullish in the pair because the pair remains bullish, and you need to place your stop loss under 56.50, I believe, is the zone that could deny the bullish continuation of the pair. Also, for example, I'm giving you an example with euro for what I remember. GBP is not that clear for me right now. I don't know. Stick to 2. I don't know what the pair will continue going up. In fact, I believe it will fall a bit more. But position in trading means using less capital because you should stay longer in the market. Okay, and I like position in trading when we are getting favored by interest. Okay, You know, some currencies pay you. I don't know if all brokers did, but most of them. Yes, in fact, you can review a lot of webinars. I have made thousands of them till this now. But what I was saying is about position trading, that you have to have a long amount of money in your account and place a bit of it in a long-term trade, okay? And in case you have a big reversal, you can stay in it. And I was saying something else and I forget it. Okay, sorry, I lost the idea. But sorry. And Rama, you asked it trenchant for a long time because no, Rama. What I was saying is that the only thing that can change a trend, that's what interest. Thank you, Ezequiel. I was talking about interest. I read Rama question and I remember it. I usually prefer long-term positions, sorry, when we are favored by interest. I don't know, trading a short euro dollar is expensive right now, okay? But pairs like GBP Yen or euro Yen give us some interesting interest amount besides the pips they give, okay? So I try to find their long-term trades. And going back to Rama, if trends generally continue for a long time because either interest rates are falling or being raised, no. I say that the only fundamental new that can affect trend is interest rates. That's the difference. If we, I don't know, markets now right now talking about if America is going to raise or drop the interest rate, not drop, but keep it on hold because they can lower them. But I believe that if the states rise their interest rate, we could see a change in the euro bullish trend in the next month, because this month we don't have the FOMC meeting already has been held. Okay, see what I mean? It can change trend. It's the only fundamental that can change trend. See what happens with the payroll. It was awful, and yet the dollar gets strength because I don't know. Maybe it's not as worse as the market was waiting. Is reading yesterday's paper, as we said here in Argentina. We could justify dollar strength after payroll by many different ways, saying that I don't know, market will have already priced it in the European rise in rates. I don't know. That's just a market reaction, and you can't forecast it. Fundamentals to those kind of things. Interrupt trend. See how market is recovering. Okay, it takes it some days, but it's recovering, and it's recovering the bullish trend that day was lost. Let's say. Rama, that will depend on on your broker. I don't know. I believe the inactive money is not good, not for you, not for them. But I don't know. Many things could happen if you stayed in a position for years. I don't want to be in a position for years. In fact, I don't like to be in a position for days, but that's just me, okay? But of course, that will depend on the broker you use, not in another thing. Okay. Well, I believe that we have, I don't know, 5 minutes more. So if you have any question, this is your time, because I won't start with any new subject in this more 5 minutes we have, and we will have a 30 minutes rest for my throat, my voice, my poor smoking voice, and then we will continue with something a bit more interesting about Fibonacci. Okay? So, seize these 5 minutes. Cacho, are you from Argentina too? Ah, no, you're welcome, Harley. Ah, okay. Thank you all. So, no more questions. So now that I'm getting comfortable talking and talking and talking, you. Rama, you're welcome, all you. I'm what you could call a scalping trading. Okay, I like to get into the market for 15 pips, 20 pips, and get out quick, and do it 4, 5, 6 times a day. I took longer term positions in daily charts just with Japanese yen, but that's just me. Okay, great, you like it. Araman, that's a good question and deserves a whole complete webinar for itself. It will depend on your trading system. That's something we were talking about last Monday, I believe. We have a webinar about making back testing, and you should find a system that lets you. I don't know if I hope you're not asking me myself, but your system should consider how many in a row trades you can win, and you can also you need to take care also of how many in a row you can lose. That's the important thing, and not get depressed in the middle. All of us, we are laughing. Okay, well, I believe this is all for this first part of the webinar. Hopes the one that should leave and couldn't get back enjoyed, and hope you all enjoyed, in fact. And I believe I will be back here in about 30, 35 minutes